Hi, everyone. 2022 has been a pretty volatile year in the investment markets. Plus, we have midterm elections coming up. So let's take a look at what that might mean for your portfolio. Believe it or not, even though we've had a pretty rough 2022, July was one of the best months on record, at least for the last 70 plus years. We had over a 9% return just for the month of July, gave a little bit of that back in August. But if you look at the third column there, the 12 months later, based on historical numbers, we might be seeing some good upside potential here in the near term. Now, you might also be asking, with midterms coming, which party is better for my portfolio? And the reality is, it probably doesn't matter. The market's been up both during Republican and Democratic control. A slightly different question might be, though, is a split government better than a united one-party control of government? And so on the left side, those are the average returns of one-party control in red versus divided government in yellow. On the right side, after the midterm elections, what's the performance of the market? Well, if the party loses control at the midterm, market performance is much lower than it is if the party maintains control at the midterms. Now, the other big theme we have going on right now is the possibility of this being considered a recession. So it hasn't officially been announced that we're in a recession yet, but we do have 2 quarters of negative GDP, and the stocks have been down over 20% during that time. Again, look at the far right column, US stocks 1 year later. Historically speaking, we see some good upside potential there. And so perhaps that'll come to fruition here as well. Now, you might be wondering which asset class or which part of the market performs best coming out of a recession. And it's small caps. In other words, small company stocks that tend to do the best. You know, the other thing that we've seen this year is a very high correlation between stocks and bonds. And so there's really not been anywhere to hide from this market downturn this year. And in fact, if we look at the 112 Morningstar asset class categories, 104 of those 112 have actually been negative this year. And so for most portfolios out there, we've seen some losses. That being said, short-term performance isn't a reason to make any big knee-jerk reactions. So in yellow is the performance of bonds over 1, 5, and 10-year rolling periods. Red is a performance of stocks during that same 1, 5, and 10 years. And then the purple is a mix of stocks and bonds over that period of time. But the longer that you hold on to those investments, the tighter that performance is and more reliable that performance is over time. And so I hope this brief review has been helpful for you today. If you do have any questions, feel free to reach out. Have a great day.